Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, October 18th, 2021. We're going to take a quick look at the indexes and then updates on the precious metals, currencies, natural gas, crude oil. I'll cover Facebook with the indexes because that's the idea I threw out there Thursday as either a pure play long or a hedge. And then if there's anything else I can think of, that's all I have down on my watch list. It's really worth noting today. And let's start out here with QQQ. So QQQ continues to run after breaking out of the what I'll still consider the primary downtrend line. I'm going to show you an alternative to that, but again, as I said, we had a few reactions, not too many, enough to just validate it. 3, and that's the minimum reactions, distinct reactions that I like to see to help validate a trend line. Because again, any 2 points can be connected at random. So as far as that goes, it's not the most defined trend line I've ever seen. But then again, we've taken it out, and as I said, each and every we took that out, we took out that level, we've filled the gap or taken the gap out now, and we're moving on up. I'm going to show you one alternative to that right now as well, and that is this trend line. This is the same chart. I'm going to move these fibs over here just to get them out of the way. That just shows where we've retraced. We're just a hair above the 61.8 fib right now. Fibonacci retracement, that is, for those of you not familiar. That's from the initial move down to the lows right there. And there's the 61.8 Fibonacci. It actually comes in right with that 370.56 level I have here. But more so, I want to show you this line. Okay, the previous trend line that I've been looking at right here, you can see it only touches this high right here, reaction high, that is from Friday, September 10th, the 10 o'clock candlestick. And again, this is a 60-minute chart. That's not the high. So I just wanted to point out that if you look at it this way, and you don't have any fewer reactions if we get one here. Remember that last one we had 3 reactions. This trend line I've set off the high. That was the very high that QQQ put in, was that candle there on September 7th, that 2 p.m. candle. Roughly equaled that high from the first. Called a double top, but that one was the high right there. And so again, it's not, to me, it's not validated yet because we have that distinct reaction. And you do, if possible, you like to go off the highs or the lows when you're looking at a reversal or pivot point in the market, a top or a bottom, even if it's just a tradable, top or a tradable bottom instead of the bottom. But you have several reactions. If you want to include that one, they're in close proximity there. You have these 3 right there. So where I'm going, we'll watch this. We have to get a reaction here, or it doesn't really mean much to me, this trend line, because we only have a cluster of reactions there. In other words, so if we keep going up through here without a noticeable pullback or at least some consolidation, then it's not validated. And remember, we still have some, again, this chips away at the bearish case each and every time we've taken out those levels I showed you on this chart. And it's not going to eliminate it. It's all certainly over once we take out the highs, but then that's kind of late to recognize that. So as I said, it's already started to chip away a little bit. Bulls get little check marks here, taking out the gap, taking out the trend line, and they'll certainly get a big one because that's big resistance right there. Now, loop over to Facebook. That was mentioned Friday morning before the market opened as a hedge to any longs or pure play, and it happens to be the best of the lot today. When I say that, I'm referring to the FANG stocks, market leading FANGs, Facebook, Amazon, Alphabet, Google's parent company, and Microsoft there. And so those today it's up. It lagged last couple of days when they were moving up, and now it's playing a game of catch up, almost 3%. I close that hedge out. I'm going to just go raw right now. It hedged up, so it pretty much offset what the Qs have moved up almost exactly in the last few days. Remember, it underperformed the first right after the breakout on Friday, I think it was, but then it's outperformed today. And I looked at it. I have it somewhere here. You can see right there from Thursday. That would have been the Thursday was the 14th, so that was right here. There's your opening. So that's where you can see. So there's QQQ, Facebook after the breakout had a little pullback to come in for a near back test, but then just recently has been outperforming. And again, so that's what hedging works, or a pure play. And look, I don't see a big reason to sell, but there's some resistance here, so I think we're going to get at least a little pullback. So I'm going to remove that hedge right now. I don't have any desire to short it. Again, by removing the hedge, effectively, I am short because I'm short the Qs. So I think Facebook might pull back here. If it can break out, if you're in this one, I've added some additional levels. I'm going to read them out to you real quick in case you can't make them out on the video. I have resistance at 344.47. We'll call that 344.50. I'm going to round off since it's a 337 point security, or 335 point security right now. 337.70, 342.30. 350, call that 90, 358.80, and then well, the highest level I have on here is 375 right there. So those are your potential targets, or where you're likely to get reactions if we continue on higher. And again, there's still the possibility we've gotten some check marks against the bearish case recently, but it's not by any means been eliminated, especially on the weekly and monthly time frames. Those are going to take a while. Today's Monday. I will do an update at the end of the week, and we'll see what's changed for the better or for the worse in the markets. And until then, I'll give you these little micro levels, and that's it. So there's my thoughts on where we go today. I think that's probably get some consolidation, maybe even a pullback here, and I may re-enter that if I decide to. I'll let you. Well, for the time being, I'm just going to keep it off. I just want to say that. Close out, keep it off, and whether I decide to get back into Facebook or not, I'll update in the next video. But here's again the reason, one of the reasons so far holding up, and this is a case that was made for the long, besides that 60-minute chart in the downtrend line breakout, was a pullback to this 200-day simple moving average that just does a great job of acting as support on pullbacks, and also resistance or sell signal when taken out. So again, that will be to really firm up the case for more downside in QQQ, the markets, and of course Facebook. You're going to need to see that level taken out. So it's still anybody's game, but you get pullbacks to the 200-day, especially when you're oversold like I'm circling down here. That's when you really, if anything else, even if you think there's going to be downside in the market, buyers are going to step in as they did on Facebook, and you're at least good for a bounce trade, and quite possibly more. Like I say, it's if you're, if you think the market's going to new highs and beyond, this to me is one of the better looking stocks in the NASDAQ 100 right now. Okay, I won't even bother with the weekly charts because again, nothing is going to change between now and Friday, at least not anything concrete. So on to gold. Gold and silver, I still very much like these trades. There's gold, there's the 60, well actually I've zoomed out to this 120-minute chart using 2-hour candles, 6 months of trading history. And gold's right at the uptrend line. Nice pullback to the trend line. And to be clear, I believe this is an objective long entry for gold still. I mentioned on Friday, still is. We're still there, holding that trend line, and that should take us to the next leg up. Next target's still 1809 and then 1838-ish right there. So nothing's changed. And if we drop below that, it's not the end of the world. There's some nice support right there. And that, I'm going to give you the level now just in case we do and you want to cycle in. And I'll give you the other things to watch too. But that's about 1749 or so. And then very important, this level here. If you start to sink below that, then you have this major reaction low about 1720 right here, that reaction low, and you have it will spike through there real quick, and that was a big washout move. That is very indicative of a selling climax. And then we came back and we made a higher low so far. So bigger picture, it's still a grind right now, and very much gold needs to take out this 1837, and I've been talking about it for a long time. Since back here, I'll continue to talk about it, and if and when we take that out, it's going to be nice. It's going to be very bullish for gold in my opinion. So work to be done, but right now, swing our way up there, and if we get stopped out, that's it. It's like any other trade. Move on to the next one. Be diversified. Don't put all your eggs in one basket. Precious metals are either going to pan out or not, but they are one of my top picks right now. And silver. Silver just doing a beautiful job respecting this trend line right here. That is a reaction. That's what I define a reaction as. When you're coming to a resistance level from below, I define a reaction as a pullback and or consolidation. There was a reaction off there. That level was a pullback. Here was a reaction, some consolidation, then a pullback. And so far there we consolidate a little, then a pullback, and so far we're consolidating. Now, we all see what we want to see. A confirmation bias can be a killer in trading, but I state the reasons for my views as to why we're going to go one way or another. So bears are seeing this as another repeat of this. And look, most certainly, if that's your thing, if you're bearish on silver, you could make an objective case to go short here at the trend line with a stop somewhat above. But based on all the reasons I've been citing recently, including but not limited to the bullish divergences in silver and the breakout here, I expect a breakout above that level. I think it'll happen soon. I've mentioned last week, and I'll say it again, still objective to go long and pullbacks at 23 support. If that level goes, there's some support below. I really don't want to see us drop below 22. Obviously, that's really the only thing below 22 is that one reaction low. So far, again, near term, very near term, the trend is bullish. We're walking our way up. Intermediate term, it's clearly bearish, right? And then very long term, which you're not going to see on this chart because it's only 6 months, silver's in a bull market. So you have a primary trend is bullish, intermediate trend is bearish, near term trend, at least off this low, is bullish. And I believe we're going to break out. Next target, if and when. So look, your objective levels to add to or enter silver position are pullbacks to 23. You've had several so far since last week. And or breakout of the trend line. A solid breakout. You want to see a solid 60-minute candlestick close or a big impulsive candle, even if it still hasn't finalized. If you're up here, this high and there's only, 15 minutes left before the 60-minute candle's finalized, you're probably going to get that breakout stick. $24, 24, we'll call that 24.87, 25.85 right there are your near-term swing targets in silver, which if hit, let me just go up to that one there, that's about another 10% on top of what we've already moved up here. So that's silver. And last but not least, I think any analysis on gold and silver is incomplete without analysis of the dollar and euro. So nothing's changed there in the dollar. This is a hourly chart, 60-minute candles. This is a bearish rising wedge with a well-defined trend line. I talked about QQQ earlier on. This one we just missed that little reaction there, but we have enough here. One, so we'll count that. We're close. 2, 3, 4, 5, 6, and then we'll call this 6 because it's a cluster to help really define that uptrend line. And then what helps too is when you break down, you see that impulsive selling. That tells me a lot of eyes were watching it, a lot of sell programs fired off and kicked in, stops were hit. And so that's a good sell signal. Nothing's ever 100% in trading and investing. I cannot guarantee you that sell signal will stick, but it's as good as it gets. And based on the scope of this pattern, if you take a bearish rising wedge, look at the distance, the widest part of the wedge, which is right there. That's your measured target from the breakdown point. So that alone should tell us, if it plays out, that is, again, no guarantee, that if we can break down here, it's a pretty big flag at this point, but either way, it roughly measures to the measured target. So this is what we're going to need to see, guys. In gold and silver, we're going to need to see, or really will help us, I should say. If you're long and bullish, the miners or the metals directly break down there. And then you have the euro, which is basically the dollar in reverse, and that still looks good. So you had a nice trend line, my benefit of the doubt trend line, your primary trend line there. Positive divergence, that's a bullish falling wedge. Remember, gold and silver tend to move in the same direction or positively correlated with the euro because of its inverse relationship to the dollar. Pretty nice support around 116 right there, and resistance, which was also a target around 116.30, and we hit it. Had a reaction, and there's a reaction, more so consolidation. We've been bouncing between here. I've been covering this since last week. You can go long here at about 115, 116, and or wait for a breakout up above that 116.30. Really, at this point, you can move that line up and capture those two reaction highs. And when we're talking pips, pip is 1/1000th of a percent, 0.00. You can, that's why these currencies trade out to the fourth decimal there. So you could take it over that level. I'll tell you what it is. I'm sure you can replicate. You should replicate it on your chart if you're trading the euro. 116.37. That's the level it needs to get taken out. And if we do, pop goes the weasel. Should run up to that 116.88 level. Probably get a reaction there. That should give us a leg up in gold and silver. Probably break silver out above that key primary trend line that I covered earlier, and then boom, on to the next one, so forth and so on. So that's what I want to see. That's what I expect to see. And if it doesn't happen, then that's where I start to be wrong and start to exit my positions. Or, I'll update you. I'll give you my thoughts. There's a myriad of possibilities, and take it as it comes. Maybe we go in and back test. We still have the divergences, and it all depends. If you're a very active trader and you want to keep tight stops, yeah, that's probably where you want to stop out. If you're a swing trader, trend trader, certainly could allow for that back test there. It would still very much keep the bullish case, the intermediate term bullish case, intact for the euro, and bearish case for the dollar alive. Okay, shortly before highlighting the most recent, long trades in silver and gold and GDX and SLV and SIL, the miners and the metals, I highlighted these bounce trade opportunities in platinum and palladium. This is platinum PL. The ETF is PPLT if you don't trade futures. And you had a bullish falling wedge here on this 120-minute chart. Beautiful breakout of that. Oh, a breakout and a back test, and then it ripped up to the primary trend line, took that out. So it was a nice run there. If you captured any or all of this roughly 20% move, I still have a potential target there, but I told you last week I'm out of these. I think they're going to pull back. I think there's more upside right now in silver and gold. We have negative divergence right there on the platinum right here. Actually, it goes from here. This is where I should have my line. So yeah, we have that divergent high, but it's actually larger if you measure it from here. So I think this was a counter trend bounce, and I think we're going to get another leg down. Again, that's platinum. And then PA, palladium, same reasons. We had, nice move here, mentioned it as a long, objective long there, and again there. We had nice positive divergence put in place here on this 60-minute chart we're looking at. We had a breakout number one, came in, we essentially back tested the same lows, breakout number two, and then I said over this level 117.55, that's your next objective entry. We broke out, ripped, had a good run in palladium, and I think it's a bear market rally or a counter trend rally and a larger downtrend, 20% run. So again, if you caught any or all of that, well, like I said, this one's already starting to play out, the correction. That divergence is playing out and continues to play out. So again, look, maybe bounce here, but again, I think we caught the bulk of the counter trend rally. You can certainly try to step in there as an active trader. You probably get a bounce off that 1750-ish level right there. But be careful, because ultimately I think this one may go lower based on what I've highlighted a little couple weeks back on the weekly charts, the long-term charts, daily and weekly charts. So, they are precious metals. If you're wondering Randy, how are you bullish on silver and gold and not bullish on palladium anymore? It's because it is a precious metal, but this one, the largest use for palladium is industrial use. It's catalytic converters. So, emissions control for cars. And so therefore, with gold, silver, you have, definitely some big industrial applications there, but not so tied into the auto industry. And then gold, of course, has that multiple uses of jewelry, alternative currency or store value, flight to safety instrument, and a lot of other stuff there. And again, you can look at the charts, and although a lot of the times they're trending together, there are times that one is going up and the other is going down. So they don't have a very tight correlation all the time, even though they are both considered precious metals. Okay, still very much like this one, natural gas. Natural gas had a major reaction high back here in 2013. Some levels around there, some reactions around that level, hit that level again. So far reversed. Put a bearish engulfing candlestick on the daily chart. This is a weekly chart here. You don't see it. I'll get to the daily in a second. And end of day chart means they update this each day at the end of the day. So on Friday we closed at 541, but as of today it continues to fall, and we're at $5 right now. I'm looking at another monitor. So we're right about there. That's going to put us, if we close where we're at now, it's going to put us right on the trend line. And again, once that trend line goes, that's going to be even a more significant sell signal. We've gone parabolic on the daily time frame. Again, I'll show you that in just a second. Oversold. Again, I talk about this one all the time. So there it is, back to the trend line. So maybe we bounce as a weekly trend line, but again, the evidence is pretty strong evidence that we put in a pretty significant top. And it's just the nature of this beast. Does these runs like this. It just, goes straight up and straight down. I don't, I look at this, I study these charts all the time. I've known this, traded natural gas for years, traded lumber for years, and you just don't see them do that and then correct this way and then do that again. They go straight up, everything gets out of whack, and then almost straight down. So that's what makes natural gas such a great trading vehicle. If you can get in on these rips and dips, find these divergent lows, get long. We don't bat 1,000 here. I don't, but I get bat pretty high, well over 500 on natural gas trading it. And again, due to the big rips and dips, as long as you don't stay too long on the wrong side of the trade, then you're going to make good money on natural gas. And the thing too, you got to be patient. Trade it every day. Don't always be in it, just like any other instrument. You don't always have to be long or short. If the charts aren't clear and natural gas is floundering around like over here, stand aside and wait for these big moves. So let's look at the daily chart, and we'll move on to crude, and then I think I will wrap the video up. Okay, and this is the NG daily chart, natural gas daily candlesticks. And here's those. You can see the parabolic runs here. There was a parabolic run. Parabolic runs almost never end well. That's what happened. And this most recent parabolic run, that is a parabola, a clear parabola. And once the parabola or the trend starts going vertical, that's usually it. It's you usually get your sell signal shortly after. There was your breakdown, and there was your breakdown here recently, and there, when you see this is a zoomed in thumbnail right here, it shows the last week or couple weeks of candles, and so you could probably make it on the video. It's hard. I know it's not these candles. I can't make them any bigger, but this big red one right here was your bearish engulfing. Let me try to circle that better for you. That shows no, that's not what I wanted to do. Right there. That red candle here engulfed the previous candle at the top, and that is again what we call a bearish engulfing candle. You want to look for it after an extended uptrend, and then you want to see follow through selling, which you did get so far. And so that's it. We're coming up on the linear trend line that I showed you on the weekly chart, which would be here, and that's, I told you, just comes in around right where we are today. This chart's not reflective of today's price action. Nat gas is down another 7.25% today. So when this prints tonight after the close, you're going to see the candle down here, and again, that's going to take us right to that primary uptrend line. So maybe a bounce there, but based on everything I just told you there, you're going to get bounces. Counter trend bounces are pretty powerful. I mean, that one right there, in that downtrend, the first counter trend rally we had, I'm going to measure this out for you just to kind of put it in perspective here. That was good for a 27% bounce. So, trading natural gas is not for the light of heart. If you're going to capture the big trends, you're going to have to use wide stops and get good entries. If you shorted it anywhere in there, you were fine. You never went underwater. You watched some nice profits get given back, but if you held out and waited till maybe something like bullish divergence setting up here, and a trend line break, look for a downtrend line. That's where the 60-minute charts come into play. Sometimes you won't see them as clear on the daily charts. That's where you can sidestep, or there was even a bigger divergent low right there. And last but not least, crude oil, big level to me at least, right about where we are, a little north of 75, 76 right there. Long-term resistance, really support, you want to call it. We have support back here. That support was broken. We backtested, failed. Big moves came on breakdowns below that level when we were above it, or rallies into it. And so we have taken it out, and I've said this before, on face value that is bullish. And so why aren't I going long for the move up to 115 or whatever? Because we have severe, or clear I should say, and pretty steep negative divergences, and it's wash, rinse, repeat. And so what chances are this breakout will fail. If and when it does, that's going to be a pretty powerful bull trap, and I think we'll see a swift reversal. And that's a daily chart right there. It takes a while to play out, so we're still above there. But when we zoom down to the 60-minute chart, which I'm about to do for you, 60 or 120-minute chart, I've got it here, 120-minute, 60-minute, 1 hour candle. Correction, 2 hour candles right here. So 6 months of trading history. Big picture, you have your primary uptrend line right here. We're well above it now, but we have a minor trend line right there that's just starting to crack today. Gives us this wedge pattern. This is your divergent high right here, negative divergence. We've had divergence. We had it here, and we had a nice correction. We had it here. We had another nice correction, but that divergence has continued to build. So it's from this point to here, negative divergence on the indicators. Indicating a much bigger drop, because the bigger the divergence, usually the bigger the drop. There's your targets. That primary trend line right there comes in around that 78.90. That's going to be the first swing target there. That should be a drop of another 3% or so in crude. Probably get a bounce there, and then continue on down here. That's that level. This is where that breakout is either going to make it or break it, hold or fail. So even if you're bullish, this could be a scenario you could trade a pullback for a back test. We did back test it once, I'm going to say that, but sometimes you'll back test a level several times after breakout. So again, this was your breakout right here. There was your back test. And should these divergences play out, which I suspect they will, you're going to come down here and you may come in for a second back test. If the buyers fail to step in and buy it up, if we get down there again, about 75, we'll call it 76, 75 and a quarter, 3/4, then that's going to be bearish. That would mean a failure. And again, that's where the divergences on the long-term daily charts and even weekly charts come into play. And to zoom on down to the 60-minute chart, there's that little minor trend line I just showed you on that 2-hour candle chart we were looking at. Here's your divergence. So this is what the 60-minute looks like. There was our divergent high, one correction. We pushed on up, made another marginal that's still divergent high, another little correction, right? And yet the third and biggest, and this time those corrections were just kind of random. They were along the way, didn't really have any clear uptrend. We had a little one there. But this one's a bigger divergent high, and it has a trend line which is starting to crack now. So again, those are your near-term levels on the 60-minute chart, and I just showed you some on the 120-minute chart for swing or trend traders. All right, we'll wrap it up here. I didn't cover these when I hit gold and silver, but I'll just mention the silver miners. Silver, SIL, silver miners ETF is still at a big resistance level. And make no doubt about it, make no mistake about it, it is not coincidence that this downtrend line and big price resistant happens to come in perfectly with that major downtrend line in the silver futures I'm showing you. So silver futures breakout, almost certainly the silver mining stocks will follow, still very much like those, as well as the gold miners. And GDX, I have it slightly above the comparable downtrend line, but again, you're going to need to see gold hold support and take that next leg up, and if so, GDX, the gold and silver miners will go on along with it. And so, case is made, divergent low at support, rally, and yeah, that's it. So nice divergence on gold, silver, and the mining stocks, and not so much on palladium. There's that PALL I talked about. There was your bearish rising wedge. There was that downtrend. There was a short entry as per the August 31st video. We milked that short. So right here, good time to cover for all these reasons, including support on PALL and the 60-minute divergences. Game that bounce, and that's swing trading for you, folks. Catch the little micro rips and dips, and instead of being caught in these and imagine trying to trend trade this in the last couple of years, you're trading today where you were back, what is that, 1.3 years ago, all the way to 1.8 years ago, almost 2 years ago. So you lost money, you made money, and that's what swing traders try to do, is capture these trends within the larger trend, or even when you're going sideways for a while, profit from those kind of trends. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.